The Reserve Bank of New Zealand's Financial Stability Report, May 2010.
I call Craig Foss.
I move that the House take note of the report of the Finance and Expenditure Committee on the Reserve Bank of New Zealand Financial Stability Report, May 2010. Mr Speaker, first of all, I'd just like to thank members of Finance and Expenditure Committee. Members briefing, looking through this report here, will note it is generally unanimous from the committee. There are, of course, differences in some areas, but overall I think that reflects the importance of the kind of the real high-level framework stuff that this report addresses, Mr Speaker. But I'd also like to acknowledge the members of the committee, our officials that helped pull that report together, and also, of course, Dr Bollard, Grant Spencer and Toby Fines from the Reserve Bank, who presented it to us as they do now every 6 months. I think this is the fourth one we've had, given a change of regulation in Parliament 2 or so years ago. They come out every 6 months. It is important to note, Mr Speaker, the difference in this report, Financial Stability Report, versus monetary policy reports that come out, although I'm sure members will be inclined to wander into that territory. They are all linked at the end of the day, Mr Speaker. The good news is New Zealand's financial system is very, very stable. And as the report notes from the Reserve Bank themselves and the report back from the committee, general theme is things are better than they were. All risks are still quite prevalent. There have been improvements, some within the control of these borders, some beyond the control of these borders. Generally, things are looking better. It's also important to note, actually, Mr Speaker, that this is dated May 20 when this report came out, and in fact we're now in August, what's that, 3-ish months later, and it's amazing how quick things move around the world and what's happened in Europe, in particular in southern Europe, over recent months, particularly in around Greece and Spain, and how that affects how the rest of the globe actually looks at New Zealand's situation and any metrics that may come to their attention that line us up with perceived higher risk. That's now the glasses they're looking at many nations around the world. Good to note, though, Mr Speaker, the world is probably in a slightly better place still than it was even in May when this report came out, and therefore New Zealand obviously still is, although the message is still, it's very, very tenuous indeed. Mr Speaker, in the report itself, it may be of interest to those members that want to pick it up off the table who haven't been on FEC, but there's a very good diagram which the RB introduced, I think 3 of these reports ago, and it's called the Financial Stability Cobweb. And it actually addressed many of the questions people would ask. There's diagrams, there's lots of reports and around all things finance, but actually there's one diagram here they've brought in. They're slowly improving it, of course, but it actually, pictorial form, diagrammic form there, actually shows how things have improved, and they do have quite solid metrics under that. And as members could see, it's there on page 4 of the report, and they'll probably note there that things have got better on the blue line and the red line is behind. But you can see the report starts there in May 2009, and it looks at the trend until May 2010, until this report. And under every single measure, other than capital, which I'll come to in a moment, financial market conditions have improved markedly since the last report, which was November 2009. The domestic environment, even the constraints of a recession, the tight cash market out there, still measure of confidence, and the domestic market in a financial stability lens, remember, that's what we're talking about here, has markedly improved, particularly in the last 6 months. Funding and liquidity have improved markedly. The global environment itself, as at that report between November and May, November 2009, May 2010, have also improved. Capital and profitability are still pretty much where they were, reflecting squeeze on margins, a lower velocity of the economy, and just a bit of confidence indicator too there, I guess, Mr Speaker. But it's just very noticeable, however, each and every one of those lines, they look back, they're at that moment, they're a snapshot in time. Looking forward, as you can see through the report and some of the graphs down the back and the commentary from Mr Bollard, actually, again, the message is things are tenuous, and we just have to keep our pencils very, very sharp as an indebted country, as a country at the whim of the credit markets of the rest of the world, like it or not. Those so-called evil foreign bankers occasionally, they are the ones that have lent this country $200 billion, and so we need to make sure that they roll over those at the very least and have reasonable terms as our economy tries to address that principle, pay that off at the very least. Mr. Speaker, the financial stability, it picks up a lot of other issues, and it looks at a whole lot of things: fiscal settings, monetary policy settings, liquidity changes and settings, which I'll come back to, just the global environment overall, to name but a few. And remember, although it's very tempting in politics often to look for the silver bullet, grab the headline, actually everything is linked. Everything is linked as those various policy settings, because we can argue and discuss as much as we like in this House and around this city. At the end of the day, actually, because we are a debtor nation, be it private or public debt, we do have to keep, as I said earlier, our pencils sharp, particularly sharp in an environment, a global environment, where liquidity is very constrained, which simple liquidity, i.e. the cash itself, credit is very constrained, i.e. the ability to actually borrow the funds in the first place, then add the cash on top of that. So, yes, not long after this, another member might excuse me, budget came just before, around the same time as this one. Other members may want to touch on that, the importance of fiscal discipline insofar as the budget is concerned, and particularly this side of the House would argue that that was adhered to, given the constraints and the demands and commitments made by this government to New Zealanders, and the tension between spend and save, Mr. Speaker. There's another very interesting part which might be new to members, if they'd just like to glance at page 9 on the bank's report, Reserve Bank's report. Top of that, it's called B2, figure B2, CDS spreads. Now, CDS are credit default swaps. Now, simply they just measure the perceived margin which others are prepared to and are lending to New Zealand, anything denominated in New Zealand dollars. Now, some might say, well, who really cares? If we're a creditor nation, fair point, I guess, but as a debtor nation, regardless if it's the Crown or private people's mortgages or working capital for businesses, actually, it's the rate that they pay is totally reflected right there in that graph. And you'll see, it's a bit hard to read, but there's an Aussie and US one over the page, which reflects the spikes in the crisis around the globe a couple of years ago, but you can see the trend in those southern European nations, Mr. Speaker. And when you line up some of the metrics, some of them New Zealand doesn't sit too well with the rest of the world, some of them we sit very, very well, and it's our mission, and I'm sure it's our obligations to ourselves and future generations to do all that we can to start to address some of the core problems which can create financial state instability in New Zealand. Thank you, Mr. Speaker. Mr. Speaker, also, as the committee noted, down the back of the Reserve Bank reports there's many, many useful graphs, and they are backward-looking, and then, of course, forecast out. And, you know, I've got no intention on political speech here at all, because I think, as all members acknowledge, we do have some serious issues in New Zealand. They have been with us, many of them, for a long time. They've just got worse or compounded over particular cycles. But there are some things, if we look and address at those things that we can control in this country, then when things that happen out of our control, such as an issue in southern Europe, well then New Zealand itself will be better prepared to get ourselves through any crisis. And a good example of that, Mr. Speaker, is just the free trade agreements, for example. Now, I know most of the House are in agreement of free trade agreements. For example, the China agreement started under the previous government, finalised, completed with this government. But regardless of that, how that helped New Zealand through the recession and how it made our financial system more stable with more credit and cash moving around the system, Mr. Speaker, it's a great example to point to of one of those things where New Zealand could control, invested in a free trade agreement, and actually helped our economy get through tough times when the rest of the world was imploding, Mr. Speaker. So on that note, I'll leave it there. As I said, I'm not getting political about this particular report. I'd just like to finish again by acknowledging my colleagues on FEC. Overall, I think we work together very, very well. And although this maybe seem very dry and boring to some people and members, it's of such import to our country that our system stays as stable